What's going on, everybody? It's Stas here. Welcome back to another video. So the stock market sold off today, guys. S&P 500 down 0.8%, the Dow Jones down 0.3%, and the Nasdaq 100 led the sell-off down over 2% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks to buy now. And I also want to share my thoughts on the stock market in general. Is this sell-off we saw today going to continue? Is it simply a healthy pull down? And I also want to talk to you guys about what stocks I own right now, the DoorDash IPO, which was crazy, and in general, where my head is at as a trader and as an investor. So if you all find value, hit that like button, subscribe to the channel. I would greatly appreciate it. And don't forget to claim your 4 free stocks from WeBull down below, which does run out here in the next couple of days, guys. So take advantage of that while it lasts. So let's get into it. S&P 500 today, you guys can see it. It broke the uptrend channel that we've been talking about here on the channel, right? Here on the 5-day, 5-minute, or this is actually the 10-day chart, and you can see it on the 5-day, 5-minute as well. We've been trading in this channel for 1, 2, 3, 4, 5, 6, 7 days. Up until this morning, we actually hit an all-time high, 32 or 37.12 here on the S&P. So we hit a higher high in the channel. We were in the channel still, and then we got that massive sell-off, right? And the second we broke that 50 SMA here on the 10-day, 30-minute chart, you can see the S&P collapsed, right? It went from 3695, 3700. It tried to hold the support of the channel, but it collapsed right through that and sold off aggressively. Now it's looking to actually hold. If I pull back, let's say, on this 90-day chart, S&P is actually looking to hold the general area of resistance that we were struggling at from the beginning of November to the end of November, right? Right around 36.45, 36.40, right around that old resistance. That's kind of where the S&P is looking to hold above right now. And if I go into the intraday chart right here, you can see we had a strong double bottom at 36.60, followed by a rally into the close, breaking out of both moving averages into the close. So that could tell me in the short term, hey, this could be the bottom. But the fact that, again, going back to that 5-day, 5-minute, actually the 10-day, 30-minute, seeing this chart, this channel being broken, that could issue more downside. So we're kind of conflicted here, right? We're seeing a double bottom pop on the intraday, but we're also seeing a break of the channel here on the 10-day. So overall, the bullish pattern on the S&P, if we look on a 6-month basis, is still there, right? So obviously the bulls are still in charge, but we're looking at small time frames to really get into the nitty-gritty and see what's happening in the short term. So short term, yeah, I mean, the fact that we broke that channel, we could be going lower, maybe 36.50, maybe 36.40, like I mentioned earlier, right around this 50 SMA on the 4-hour chart. I mean, that could be where the S&P goes to, and we're not necessarily selling off further here, and the technicals obviously show this because we haven't really drastically dropped yet, so it's too early to tell, honestly. But as long as we're holding this overall uptrend on the 4-hour chart, this 50 SMA, I'm not thinking we're gonna collapse quite yet. Sure, if we break 36.40 and especially 35.90, which is this old resistance from back in September, right? If we break those levels, that is where we might collapse here on the 4-hour chart, maybe to the mid 3400s, right? From 3400, let's say from where we are now to 3400. Even then, that's not too big of a drop. It's only 6%, which honestly would be a healthy correction on the S&P. And to be honest, I wouldn't mind if it did get to 3,400. That could be where we go. I don't like giving these predictions. I'm not a weatherman, right? I don't like giving these longer-term predictions on the S&P. It's kind of hard, but if I were to guess, maybe we rally into the end of this year, and then as 2021 hits, January, February, maybe then we see a bit of a correction down to 3,400. Who knows? Right around this 180 SMA 4-hour chart. Let me know your thoughts on that down below. But at this point, it's just too early to tell if we're going to drop further or not. And we just have to look at the levels I just mentioned. And same thing with SPY here, guys, right? SPY holding 366 as support right around that 50 SMA on the 4-hour chart. So watch out for 366 SPY. If that breaks, we could be going down 363. 303. So those are a couple levels there. And on the upside, we have, of course, 369 where we've been struggling, and the all-time high at 371. So those are some support resistance levels to keep your eyes out on. And for the Dow Jones, guys, down 0.3% today. And this is actually looking a bit toppy, if you ask me. I mean, a little bit, I guess you can say. We struggled at 30,100 for multiple days last week. We talked about that. We broke out of, let's say that we broke out of that level. Now we're seeing a bit of resistance at 3,200, although we did hit an all-time high today at 30,300. This is kind of looking like a double top, right? We double topped at about 3,250. We broke 3,100 now, which was a big support, so that's a bad sign. And we're actually trading in between 29,900 and 30,100. So keep an eye on this range, what the Dow does in between there. And when it comes to the Nasdaq 100, guys, this got hit the hardest. A lot of the time when the markets sell off in general, we see the growth stocks, the tech stocks get hit harder because they typically go up more when the markets are green. So it kind of works both ways, if you guys get my point there, right? The markets, when they're green, growth stocks, tech stocks usually do better, and they usually do worse when the markets go down. So Nasdaq hit an all-time high yesterday, 12,650. Now we actually sold off, broke below 12,500, 12,400, and now we're trading right around that old resistance from a couple days ago, actually almost 2 weeks ago, back in the end of November. We're actually holding above 12,300, so that's a critical level of support. If 12,300 breaks, expect a gap fill down to 12,150, right around that 180 SMA here on the hourly chart, and that would actually put us right back to where we were a couple months ago, right? Where we saw that, actually a couple weeks ago, when we saw that resistance at about 12,100 that I was talking a ton about. So that could be a point where we do find support on the Nasdaq right around 12,100, 200. So let me know your thoughts down below in the comments, guys. What are you doing? As always, I would love to know. Now, when it comes to me, and also let me know your thoughts on the market. Are we selling off? Are we going to rally right back up here? I think it's too early to tell, but I'd love to know your thoughts down below. So for me, guys, I actually took a little loss today on NNDM. I wanted to just cut the loss, play it safe. And this is one that I'm kind of kicking myself about because I was up, right? I was in the profit. I was in the green, and I didn't lock it in. It was kind of a lesson learned for me. Sometimes even when I'm in the profits, in the green, I think the stock's going to keep going up. And that's kind of, you guys know, trading is a psychological thing. And for me, this was a short-term trade. And I was like, all right, it's going to go higher than 730. We got to wait it out. I didn't even set a stop loss, which was stupid, or a trailing stop loss, rather, when I was in the profits, which was stupid. And it came back and bit me, right? I was in at 680. We dropped down this morning, or actually not even this morning, later in the day. We dropped down aggressively to 630. I was actually out before this, but you guys can see this thing dropped a ton from where I got in. And you have to realize, a 50-cent move in a stock that's priced $7, that's a big move. So from 680, let's say if I held it down to 630, I would have been down about 6-7%. So I actually cut the loss before that at about 665. So I took about a 2.2% loss on this position. Nothing too crazy. I'm not bearish on NMD, but I just wanted to cut it loose, raise up a little cash, and just be a little cautious in case the market does fall significantly. Not saying it's going to fall significantly, but let's say it does fall a little bit, like we talked about in the beginning portion of this video. So overall, yeah, NNDM sold off today. It's still in the uptrend channel, which I realize, right? And I'm not bearish by any stretch of the imagination. And I might consider re-entering if we show the uptrend continue, right? We've seen it before. It's seen a high. Look at the channel, what happened before, right? It hit a high at about 720, sold off to about $6. So this could be the sell-off period, but we don't know quite yet. We have to play it safe. So once it ends up popping back up like it did before, if it does that, maybe we could re-enter it at about $7, $7.10. I'm willing to lose a little profit there just to keep some peace of mind that I'm not going to end up bag holding it, let's say, for example, right? If it ended up dumping down to the low sixes, for example, right? So me cutting the loss is a little bit of peace of mind, and that's what I did today, guys. Nothing really else. I'm still holding my other positions. Alibaba, I was actually considering cutting Alibaba today just to play it safe, but then again, guys, I'm in at a pretty good price at about 269, so I'm going to hold on to it, right? This is a longer-term swing, not like NNDM. NNDM, I meant to get in and out in a couple days. Didn't work out, but Alibaba, this is a longer-term swing, so I'm still in that one. Workhorse is another one I'm still in at about $22. This is one that actually spiked up aggressively earlier. We almost hit $23 if you guys saw it. We broke out of the 22 resistance. We failed holding it as support, which is not too great of a sign, but the fact that we're out of this wedge on the hourly is a good sign anyway, right? So overall, I'd like to see 22 break for us to get more momentum in Workhorse to the upside. I think it's coming here, and Apple's another one I'm still in at about $112. This one went down 2%. It actually hit $126 earlier in the day, so big pop in Apple, followed by a decent sell-off here, some profit taking, and you can see Apple's actually holding 121 right here at the end of the market into after hours as well, which is an old resistance from a couple weeks ago, so that's a good sign. I'm still in SLV and silver, and the precious metals got clobbered today as well. SLV down 2.6%, and Electronic Arts EA is another one I'm still in, which, guys, it was green. It was green today. What do you know? Up 0.8%. Up to $133, and here comes a big test on EA. It's done very well in the past couple of weeks, but for this momentum to continue, 134 needs to break, guys. It needs to break. We struggled there back in June. We struggled there back in September and October. This needs to break out, and honestly, I think we're going to the 140s on Electronic Arts. So what do you guys think? Let me know down below. What are you guys doing? Are you buying? Are you selling? Are you taking a little losses, raising up some cash just to play it safe? I'd love to know. Let me know your thoughts in the comments. And if you are enjoying the video, hit that like button. Let's try to get 400 likes on this video. And don't forget to get your 4 free stocks from WeBull linked down below. So DoorDash, guys. Oh, man, DoorDash. What a day it was. So this actually came to market at about 12 p.m. here on the East Coast. I forget the exact time. Here it's saying, okay, 12:45 here on the East Coast. And originally, guys, get this. These shares on Tuesday night, yesterday, they were priced at about $95 to $100 or $90, something like that. They were pricing the DoorDash shares, and it actually opened up at $182 or something like that. $182 is what it opened up, so it pretty much doubled up from that original IPO price that they were looking to do, and it went to 180. Opened at 182, dropped to 163, popped back up to 195, sold all the way off to 172. Now it popped up to 191 later in the day. Now it's trading at about 185 in the aftermarket hours. So this thing is unbelievable, guys. And at this point in time, with the stock being priced at about $180, $190, give or take, the market cap is about 55 to 60 billion. It could be 52 billion, could be 62 billion, but for 50 to 60 billion is where it's been hovering today, at least, right? And that is unbelievable in terms of, I'm not saying it's overvalued, but compared to competitors, we'll talk about Grubhub here in a second, they have a pretty hefty market cap. And they actually did, in terms of revenue, I actually looked through the SEC document, took some notes here, guys. Revenue, they did $294 million in revenue in 2018, right? And they actually did $885 million in revenue in 2019. So they saw pretty much a 3x there from 2018 to 2019 in revenue. So they're growing a ton in that 1 year. And this year, the first 9 months of this year, they did almost $2 billion in revenue, $1.9 billion in the 9 months ended September 30th. And who the heck knows what they did in the fourth quarter? Let's say they did $600 million or $700 million. I'm just throwing numbers out. They could have ended up doing $2.5 billion in 2020, right? Which would be another 3x from the 2019 $885 million. So they're growing a lot. Let's just put it that way. About 2 to 3 times revenue every year the past couple of years is what DoorDash is growing at this point. And again, the market cap's about 55 to 60 billion. And as its revenue grew, it actually also narrowed its net loss, DoorDash did, to $149 million over the same period in 2020. So they lost about $149 million in 2020, and in 2019, they had a net loss of $533 million. So they're narrowing their loss, revenue's going up. That is a pretty good sign. So maybe the fact that their $55 billion market cap is a lot bigger than the Grubhub $6.5 billion market cap. It's literally 10 times bigger. Maybe that's because they're growing a bit quicker, and it's got to be that. And I don't know if it's warranted. Is that worth almost 10 times the valuation? I mean, I actually wrote down some numbers here from Grubhub. So Grubhub did $1 billion in revenue in 2018. So in 2018, DoorDash did $294 billion. So Grubhub did about $4 billion or 4 times more roughly in revenue than DoorDash, right? And in 2019, Grubhub did $1.3 billion. So remember, we said DoorDash pretty much tripled their revenue from 2018 to 2019, right? Grubhub only went up $0.3 billion. So they didn't even triple it. It only went up 30%. And I'm saying only like, oh, it's not a lot, but compared to the 3x that Grubhub did, or that DoorDash did, yeah, that 3x or that 30% Grubhub did from $1 billion in 2018 to $1.3 billion in 2019. It's not as good, and they did so far in this year, the three quarters this year, they did about $1.32 billion in revenue. And who knows? Let's say they do $500 million in the fourth quarter, they might wrap up the year $1.8 billion, maybe $2 billion if they have a great quarter in 2020. So yeah, Grubhub is not worth as much market cap value wise, about 10 times less, and it's not growing as much. So you guys have to answer this question for me. I don't think that DoorDash is worth $60 billion. I mean, if it came down to maybe $30 billion, maybe 25, that would be a more attractive spot for me. But I'd love to know your thoughts, right? Due to the growth, I guess that's why it's worth a lot more than Grubhub. Grubhub's not growing nearly as quickly, that revenue. And for all we know, in a couple years from now, DoorDash could be much bigger than Grubhub. We don't know that now for sure, but I'd love to know your thoughts down below. Did you buy DoorDash? It's going bananas here. Did you buy it? Are you staying away from it? I would love to know, so drop me a comment down below. Another stock here, guys, GME. And by the way, guys, I did not buy DoorDash. I'm probably not going to buy it, or in the short term at least. But what I'm looking to actually buy tomorrow is Airbnb. And you could only imagine what Airbnb is going to do tomorrow, guys. You can only imagine. They're supposed to open up at like 55 or 60, or their IPO is priced at 55, 60. For all we know, it might open up over 100. It might open up over 100. I think that's very possible. So watch out for that. And another one here is GameStop. GameStop got obliterated today, down 20%. Yesterday they reported earnings, not so great, not so bad either. But we saw same-store sales down over 24%, about 25%. Although e-commerce grew over 200% year over year, and the stock fell either way. It went down 20%. And if you guys remember in my video yesterday, I mentioned how on the 4-hour chart, if GameStop can get to this 180 SMA, I think that could be a buying point, right? We've seen before in the past couple of months, GameStop held that like clockwork every time it pulled down. It rallied off of that point. So at this point, it's too early to tell if we're going to rally off of it, because on the 5-day, 5-minute here, you guys can see we actually didn't really break out, especially today on the intraday chart. We didn't really break out of the downtrend. We're just consolidating at about $13.50, $13. So we really have to see direction here. If we end up popping out tomorrow into the mid-14s, that would be a good sign that, hey, maybe that 180 SMA on the 4-hour chart's a bottom, and we could end up getting in from there. And I think there could be a lot of upside if GameStop can hold this level, right? Maybe back into the $16, $17, $18 level. So a couple other ones here. AAL, American Airlines here, bursted out of that $16 level, $16.50, $16.60. That was a level of resistance from back in the month of March of 2020. We ended up going from that point, $16.70, all the way to almost $19, $18.70 to be exact. That was a move of about 8-9%, so big move there. And now we're seeing AALs pulling down pretty aggressively. Today it went down about 3%. At its lowest point earlier in the day, AAL was at about 1660. And what you guys notice is it actually hit a lower low and it rallied into the close of the market, and it's actually up after hours here, which could indicate maybe that's a bottom on AAL here on that 1670, 1680 support. And maybe we rally back up above $18.50, maybe $20. There's no doubt about it. There's a lot of momentum here with AAL, and every pull down it's seen in the past couple of weeks has been a buying opportunity. So we have to take this seriously. But if it breaks, let's say $16, $15, gets back into the 14 level, that's a completely different story. And especially if we get bad news around the CV, that would be bad as well. But with everything kind of opening up, we're seeing the light at the end of the tunnel slowly here with the V-shot coming up. I think AAL could be a decent play. Same thing here with CCL, which is Carnival Cruise Line, right? We bursted out of 22.30. We ended up rallying to about $25. Now we're pulling down on this 4-hour chart, about to test that old resistance as a new support. Same with the 50 SMA. We're about to test it. I mean, we already did. We actually held it as support today, and we rallied up into the close, same as AAL. So yeah, I mean, this could be a dip buy on a momentum stock here. CCL, I think anywhere from 22, 23 could be a buy, and maybe we rally back up to the mid-20s. And I think if 24, 25 breaks, watch out for that test to 27, which is where we were back in the middle of June. And I have a couple tech stocks here that I'm interested in. Facebook, if you guys remember, I actually had Facebook, was it last week or something? I locked in the profit there, and now we're actually a lot lower, not a lot lower, but a decent amount lower for my average cost. So looking back, I'm glad I locked in that profit. But anyway, this is one that could be opening up an opportunity here, right? We're in this wedge on the 4-hour chart. And it seems like with today's price action, we got down to about 273, 272. We held the support of the wedge, and we actually saw a bit of a push here into the close of the market. That's a very good sign that Facebook wants to hold this uptrend on the 4-hour chart. Now, the thing is, we're downtrending as well. We're making higher lows, but we're making lower highs in this 4-hour chart. So what we have to do to actually get into Facebook is, honestly, guys, we need to make a push towards 280 and break out of 280. I think 282 to 285 into the 290s, that could be breakout potential on Facebook. And honestly, I wouldn't mind buying into that breakout, 285, 290, because I think Facebook has potential back into the 300 level. And I think once we get ourselves out of this wedge, and I think we're going higher, I'm bullish overall. I think this thing could have 5 to 6 to 7% upside. Same thing with Microsoft. We talked about that yesterday. I'll mention it again. It's actually peaking under the wedge, which is not too great of a sign, but the second it breaks 218, 220, I think this is off to the races. And Amazon's the same thing. A lot of these tech stocks are in this wedge on the 4-hour chart. You can see it here on Amazon. We're about to test the support of the wedge at about 3,090 to about 3,100. I think if we hold that, watch out for the breakup, maybe to about 3,200. That's where it's going to test the resistance of the wedge. And if we break out of there, oh man, this could be going mid-3,000s, which honestly, I think we're going there sooner than later. And I could be wrong. I could definitely be wrong, guys, but that's just my opinion here. And NVIDIA is another one that just collapsed today, down 3%. But like Amazon, like Microsoft, like Facebook, it's also in this wedge. Lower highs, but it's also making higher lows. So watch out for 515, 512, 510 to hold as support. Maybe from there we do see a rally back into the mid-500s. That could be a point of maybe even a breakout. If we break out of 550, we might be going back to 600s here on NVIDIA. And the last one is DKNG, guys. Good old DraftKings. This pattern is looking pretty choppy, man. Honestly, this is not a chart that I like. I mean, it's looking like a head and shoulder now to me. Left shoulder here, head here, right shoulder forming, especially as we went down about 4% today. I mean, we were in this downwards channel. We broke out. I bet a lot of people got faked into DKNG yesterday on this breakout of the channel. But again, now we're actually curling back down. So this could be a head and shoulder. I'd be careful. We have a neckline at about 47. So maybe we go back down to 47 to test. If we break that, oh man, we could be going lower, maybe $44, $45. So yeah, be careful with DKNG. And honestly, once this thing settles down a bit, find some consolidation, some support, wherever that is, I might consider picking up some shares, ideally in the mid 40s. That's kind of what I'm hoping for. We'll see how it ends up going down. I think there is a decent chance it could get to maybe even 47, and if we're lucky, 44, 45. So that's it for this video, guys. Let me know your thoughts down below. If you all enjoyed the video, hit that like button. Again, we're trying to get 400 likes on this video. Subscribe to the channel as well. We're almost at 20,000 subscribers. And don't forget to join the Discord chat and the Facebook group. Follow me on Twitter and Instagram at StasSurfS and get yourself 4 free stocks from WeBull linked down below. And if you guys are interested in my M1 Finance portfolio, where I started a portfolio from $0 here exclusively for the YouTube channel and how I built it up to where it is today, I did an update video earlier today. I'll pin it up. I'll put it up right here. Click on that, or I'll link it down below. Either way, go enjoy that video. And again, don't forget your 4 free stocks. I'll catch you all in the next video. Thanks for watching as always. Stay safe out there, guys. Peace out.